Welcome to Private Lending Insights. I'm your host, Rocky Butani. In this episode, I interviewed Kirill Bensonoff, CEO and founder of New Silver. This is a private lending company based in Connecticut, which started off as a technology company that built a loan origination software for private lending and ended up becoming a lender themselves. We talked about their lending activity the past 12 months, the states they're most active in, a little bit about their company history. We talked a lot about technology and AI, how it affects their business and private lending in general. We also talked about their wholesale white label program, which is for private lending brokers and smaller lenders that can partner with New Silver to fund deals throughout the country. I hope you find this episode to be insightful. Here's my interview with Kirill from New Silver. Kirill, thanks for joining me for this episode of Private Lending Insights. How's everything at New Silver starting out this year so far as loan volume and the growth of your business?
Awesome. Thanks for having me, Rocky. I'm glad to be speaking with you. Things frankly started a little bit slower earlier in the year. I think just January, honestly. But we've definitely picked up steam. We've had a couple of really good months, a couple of record months even. Perhaps this month we might set a new record, for us. But things have picked up quite nicely.
Excellent. Well, from the stats that I have about your company from Forecasa and Elementix, I can see some sort of the loan volume that you guys are funding. Looks like you funded over 150 loans in the past 12 months, which is quite impressive. And one thing that surprised me is the concentration of where these loans are. I've seen that you've done a lot of loans in Texas and Florida, but your company is based in Connecticut. So tell us a little bit about the geography of the where you're lending and how you've been able to tackle those markets outside of the Northeast.
Absolutely, yeah, and I would say Connecticut is maybe our third top market, or third or fourth, something like that. We definitely love the Northeast market, especially these days. I think Connecticut was like the number one growing real estate market recently, and but the way that we kind of look at it is we look at the data. We're a data company, we're a tech company, so we look at where the activity is taking place, where the risk-adjusted returns are what we want them to be, and that's where we are.
What are some of the states that you'd like to do more business in at this time?
Connecticut and Massachusetts. Yeah. And we do a fair amount. Like I said, I think Connecticut is like third, maybe Massachusetts fourth, fifth, somewhere in there. So it's definitely top five. But I do, we still like the home area. And again, the market is really, really good. The data is actually really good here. In this, I live in Massachusetts, so the area, the data looks great. We'd like to kind of continue to penetrate these local markets.
And within the Texases and the Floridas, are you still expanding there? And have you seen any challenges in those states?
We are, yeah. I think Texas we have a few partners there on the white label side. So that's kind of how we've grown our footprint there. Florida is, it's Florida. I mean, it's everybody's building and there's stuff going on all over the place. We've definitely pulled back from some areas. I think Florida, especially, such a huge state that, geography wise, we've pulled back of some of the West Coast, Florida, West Coast, Gulf Coast areas, and continue to do business in others. So yeah, we're continuing to grow in those states.
How about the rest of the Southeast? Are you actively lending in states like Georgia and the Carolinas?
We are, yeah, we are. I mean, a lot less, I think. Probably maybe it's in our top 10, some of those, but a fair amount less than Texas and Florida.
All right. And looking at the stats, I see that you've done some loans in California, which seems a bit unusual for a company of your size based in the Northeast. How's it been lending in California thus far?
We love California. I mean, it's a great market. It's tough to penetrate. I think we have a few partners there, and I think we have maybe a reputation now for doing some of the ground up loans. I think we're able to do those, and we have a good process, strong underwriting there, and partners like that. So yeah, we're continuing selectively lend to California.
Right. And tell us about the types of loans that you're funding most out of, or give us a breakdown of fix and flip versus new construction, DSCR loans as well.
I'd say just, last few months, roughly, 40 to 50% fix and flip, you know, 20% DSCR, and the rest new construction.
Right. And are you looking to grow one type of loan versus the other?
RTL, I mean, broadly construction and fix and flip. That's really our focus. DSCR is great. I mean, I think we're competitive. We have a good process, but it's not necessarily our main focus. We initially developed it to refi our borrowers. Now it's kind of grown on its own into a fair book value, but yeah, we're focused on RTL.
Right. And how about property types? Are you 100% focused on residential, or are you doing multifamily, mixed use, and other commercial property types?
We had a pilot for CRE multifamily, and we did a small number of loans there, and we kind of paused it for now. We just found that we don't, we're not ready. We don't have a great network. We may not have the best product out there, and yeah, we're spending a ton of time and not getting anywhere.
Okay. So pretty much residential 1 to 4 units is where you're focused.
But the majority, we occasionally do, something slightly larger, maybe up to 8 units, but the majority is 1 to 4. Yeah.
Okay. Nice. And let's talk about the market in general and private lending. Tell us about some of the trends you've seen in the past 6 months or so, what you're hearing from borrowers as well.
I think just in general, if I wanted to kind of prioritize what the bigger trends are, I think market is continuing to get more and more professionalized. It looks like, there's less. We started in 2019, very different space. Obviously, everything was different, and I think there was quite a lot more people doing this as a side gig, and now we're seeing a lot more professionals. Obviously, the rise of DSCR as a strong contender for whether it's refi or new purchase, right? That would keep that appears to continue to accelerate. Um, yeah, those are kind of the big things. I mean, I think I what we're seeing is if people can build from the ground up, they can continue to make money. Fix and flip is just a lot harder.
Sure. And what are some of the challenges your borrowers are facing at this time? Are they, are the higher interest rates a problem? Is it identifying deals? Is it materials? What can you share about that?
Yeah, from what I hear, it's really about the inventory, the lack of inventory, right? The lack of opportunities, and it's tough. It's still tough to find deals. I haven't really heard on the cost of capital or the higher interest rate too much, right? I mean, if we think about where we were during COVID, or at when the rates were zero, the Fed rates were zero. People were originating maybe in the eights, right? Just roughly, maybe somewhat slightly below, but we're in the eights, nines in some pieces. I don't think we're far off from there today, and rates are zero, obviously. So I don't know that people are too put off by the interest rates, especially the pros, right? They know exactly what the hold time is, how long they need, how much holding costs are, uh, and they're not scared.
Okay. And how about defaults and foreclosures? Have you seen a lot of defaults in your business lately?
We have not seen a lot ourselves. I mean, we do have some, but it's I think overall we just ran the numbers from the beginning. It's like less than 50 basis points overall, and now it's minimal. Just the current book, it's minimal default. Um, no, we haven't. I think if even if defaults happen, we've actually been able to either work them out or take possession and essentially sell it for additional profit, right? In some cases, we've lost money in some cases, but for the most part, it hasn't been an issue.
But at this time, does it seem like there's any stress in?
No stress.
Great. All right, let's switch gears a little bit and talk about your company and capital and your technology. Let's start off. Just tell us about your company's journey in private lending, when you started, how this all came about that you got into private lending.
Yeah, I mean, I'm a technologist by background, so we initially the idea for New Silver was a software company. So we built the software first, and we were piloting and testing it. And there was people liked it. We had a few people testing it, and kind of put the car before the horse, I think, in that case. And we initially were going to sell the software, but we just for sort of market reasons, we decided that's not the avenue we want to go down. And then we had the expertise. My partner Alex comes from the real estate world, so he was willing to take on the underwriting side of things, and I have enough expertise in sales and marketing that we decided that we'll take a foray as an originator and give it a try, and here we are.
Interesting. So you started, you built a software that was going to be a LOS for other lenders.
Correct. Yeah. Yeah. Our idea at the time was, and we still use our own software. I mean, and this is still the crux of, what the value add is. But the idea was that we're going to build something that was like a rocket mortgage for the private lending industry, where we would pull data, we underwrite pricing, right? We do that now. Like it's the pricing that in maybe a slightly slimmed down version. There's been a lot of iterations, but we still do what we set out to do, but we do it only for ourselves.
Interesting. Okay. And then so what year was that again that you started that?
2019.
2019. Okay. And then at what point did you realize that it was better to be an originator instead of selling software?
Yeah, I mean, we built the software in 2018, and then really I say 2019 is when New Silver as the originator, we started at some point in 2019, maybe September. So we tested it for a while. We started the market in more depth. Like we didn't have the best understanding, I think, when we started building the software. By the time we finished building it, or this V1, we liked the software so much that we are like, hey, we got to do something with it, right? But we didn't really feel like we could build a great company selling the software. So that's when we pivoted. So really 2019 is the pivot.
Interesting. And how about the operation? Tell us about where you're located and how big your team is and any background about your company.
Yeah, we're about 30 people. We're headquartered in Connecticut. We're a hybrid company. Um, you know, Come into the office. I mean, I live, like I said, in Massachusetts, so I'm about an hour and a half away. Come in maybe once a week, sometimes once every 2 weeks. The majority of the client-facing team is in Connecticut or a drive. Some folks are in Massachusetts, so we all get together, a couple times a month, few times a month, depending on the team and the situation. And then everybody else are remote. So when we built the company to be remote first, and then we kind of switched into a hybrid because there's still huge value in seeing each other face to face.
Nice. And just to clarify, I forgot to ask earlier, the software that you built, have you offered that to any other lenders, or is that just something you?
No, it's proprietary. Yeah, we use it ourselves. The only way to use our software is to become a white label partner. Our partner use sort of, it's not the exact same software, but it's very, very close. And we built like a whole other platform for them.
Okay, nice. And let's talk a little bit about capital structure. How exactly are you funding your deals? Do you have a debt fund? Are you selling most of your loans? Um,
We do have a debt. Yeah, we're doing both those things. We have a debt fund ourselves that we've raised equity, and then there's a capital provider on the debt side. And then we have forward flow relationships with asset managers, and we're selling the remainder of the loans. Yeah.
Great. And how's have you had any issues or seen any challenges with the capital markets in the past 6 months?
I would say no. I mean, I think we're not obviously not the biggest lender, and not in the top. I don't know, not in the top 50 probably. I'm guessing, but we provide, I believe, solid underwriting and good process. And so I think, while we may not be the biggest volume driver, we provide product that doesn't default for the most part, knock on wood. and and I think we haven't had problem. We've had long-standing relationships with both our equity investors and our outside flow partners, and we've been lucky enough to continue to have that relationship.
Right. And let's talk a little bit about your technology, your software that you've built. What are some of the ways that you've been able to benefit from using your own internal software, and how does AI play into how you process loans these days?
Yeah, tons of stuff there. I mean, we automated a lot of the process interactions. A ton on the processing side, some borrower facing, some team facing, internal facing. So, I mean, I think it's anything from like uploading documents. When the borrower uploads docs, we parse them, review them, and sort of provide our underwriters, sort of a simple system, red, yellow, green, in terms of whether or not these documents are the correct documents, and so forth, to integrations with all of our service providers, from appraisal management to servicing to draw management to everything else, and continue to build in AI to really do help us on along the whole journey life cycle, help us and help the borrower. I think that makes obviously us more efficient. It helps us make less errors and mistakes, close loans faster, and all of these things help the borrower.
Do you have stuff built in that can detect any inconsistencies in what borrowers provide, or potential fraudulent borrowers? Has that been a common issue lately?
It's come up. I wouldn't say it's common, but it has come up. We've had, our share of, just like I'm sure everyone else in the industry, our share of potential fraud. And I think we've had like one case way back in the day when there was actual fraud, and it was resolved by title insurance. We have not yet built anything, and I'm not sure that we will, or maybe we'll need to like buy this, because this is a very fairly complex scenario, right? But we don't have right now anything that is in-house fraud detection AI driven. So that is an interesting avenue, and I think that it is something that we are going to definitely explore.
Right. And so you mentioned that your technology that you've built is used by you internally, and then you mentioned white label partners as well. So let's talk a little bit about your white label program, what we may also call a wholesale program. Tell us a little bit about that program. Give us an overview, and why did you create that in the first place?
Yeah, we created because I think people were asking us if we have something like that, and it's really, like I said, it's a replica of our software that is not branded to New Silver. It's white label to the partner, so people can go in, upload their logo, create their own mini portal for themselves, right? And then they can either price loans on there, send term sheets, have their clients come in. Nothing is obviously branded to New Silver. It's white label to them. Yeah, I mean, the program is essentially ground up and fix and flip, and I think it's a fairly aggressive program where where we do the underwriting and we provide the capital, and it's meant for smaller lenders, brokers, people like that.
The use of technology may not be the first thing on a mortgage professional's mind when they're looking at white label programs. Tell us a little bit about the economics. What's the benefit to lenders or brokers, as far as what they can earn, and what maybe the splits are with points and rate.
Yeah, off the top of my head, I think we take like 50 basis points at the starting rate. There's some gradient scale there, but it's like 50 basis points origination, and they grab the rest. They can charge processing fees, things like that, and then they basically would get the borrowers. We built our program so that we want to incentivize our partners to lend at fairly aggressive rates where we think we're, we believe we're fairly aggressive on the interest rates. And so we obviously they need to make money, and they do that with their, their processing and their origination fees. And then we want to pass through the low interest rates so that we can attract more and more potential, end clients. So that's kind of how it works.
So the broker or lender, they kind of determine how many points they want to charge, and then is there a pricing engine that when they're entering a deal, they could see all the different options of
That's right.
points versus and you could see leverage, and credit score affecting the pricing.
Yeah, they would enter all that stuff in. It would spit out like what it would be, and then they can play with stuff. Yeah, that's how it works.
And how long have you been operating this white label program?
For a year and some. I don't remember exactly when we launched it. Yeah, year and a half. Yeah.
Okay. And how's it going so far? Have you been able to sign up a lot of new partners, um, and is everyone fairly happy with it?
People are happy with it. Yeah, we have. I mean, we close deals every month through the program. I think we're pretty selective, so we put people through a little bit of a process to make sure they're not just signing up and that we'll never hear from them again. So we want to make sure that we're signing up partners that actually want to be partners, and so there's a bit of a process there. But yeah, it's been going pretty well. We're expanding it. We're all talking to new people all the time, and signing people up wherever it makes sense.
And you mentioned being selective. What are some of your qualifications that or requirements for someone to qualify for this program?
I mean, I think we want to make sure that they have, the right presence, that it's not somebody with a website that says they do, they sell mattresses and now they want to do a loan. We want to make sure that they're really niche focused on the loans that we can help them offer, that they've got experience, that they actually have deal flow. Fairly standard type of stuff, but we won't just sign up everyone that fills out the form. We do talk to them first. We want to make sure there's a good fit, and that all those things are in place.
And for people who are not familiar with the term white label, it's essentially where the lender broker has their name on everything, the portal. But is it table funding, or is that dependent on what state they're originating in?
It's closed in a generic entity, so it's not, I guess, technically table funded. It's closed in a generic entity name, but everything else is branded to the partner's name.
Got it. And then so on the term sheet or on the loan docs, it'll show this generic entity as some of the fees going to your generic entity.
Probably on the card. I'm guessing on the term sheet, I think it just shows the partner's name. Yeah.
Great. And then as far as offering this white label program, we only mentioned earlier that a few states that you've done a lot of activity in, but if you could just clarify for our audience the geography of your program. Are you lending in most states across the country, or is it a bit more selective?
It's most states. I think in some states they need to be licensed, so it's obviously in accordance with the laws of the state. So I believe in California, even the broker has to be licensed, right? And in a few other states, it's the same situation. If there is no license required, then that doesn't apply. But we would be able to operate as long as they're duly licensed, and we're licensed, obviously, in the states that we're in, about, I think, 38, 39 states at New Silver. Yeah.
All right, excellent. And anything else you want to mention about the white label program as far as the process to sign up and how long it takes, and anything else you can share?
Yeah, I mean, you can find more info on the website I think you just click on the partner program when you land on newsilver.com. I mean, the onboarding process, if you meet all the criteria and you're in the business and have deal flow and experience and a nice web presence that speaks to your qualifications in the business, I mean, we can get you onboarded fairly quickly. It could be a few days.
And are you asking people to show a history of or itemized transactions that they've been involved in closing?
We do ask for a loan tape, and it doesn't. I don't think we ask for a huge amount of detail, but we do want to see some of that history and just some of the experience. But oftentimes when we have a conversation, it's fairly clear that, someone who's in the industry, again, they have a website, they've got history, they've got, testimonials. Sometimes it's not needed. So it's almost at the discretion of the partner manager to ask for things or not, but we do tend to ask for a few things.
And the partners that you've signed on so far, do you find that they've historically done business just pure brokering, and then they're looking for more of a white label partnership, and that's when they sign up with you?
Yes, I would say it's 50-50. Yeah, it's some people who actually already have, and some of our folks work with other capital providers, right, in a similar situation. But it's 50-50. It's people who we do also, we work with brokers, right? So they don't have to be a lender necessarily, right? As long as and we work with some very, very good brokers that, I think it's a tough thing to find in this industry, but there are good brokers out there that actually understand the products and bring real value, right? That's what we want from a broker. They want to, we want them to bring some kind of value to their end client, right? Not just kind of find the deal and then try to charge 2 points for something the client probably could have found themselves, right? So maybe there's a slightly more complex deal. Maybe there's other things, and maybe there's a lower cost of capital that we bring versus what they had before. Now the broker can say, "Hey, this is the value I bring." So we have great brokers on our in our program, and then we have some lenders who are, they truly want to be lender. They own their relationship, and they appreciate the white label nature of how we've built everything.
Right. And as far as since you mentioned it, talk a little bit about the pricing or the some of the advantages of someone working with New Silver instead of using whatever other sources they've had before for brokering, or maybe they use individual investors. What are some of the benefits? Tell us about leverage or pricing for most of your short-term loan programs.
Yeah, I mean, I think we our fix and flip program starts at 9, ground up, I believe, is around 10, up to 90% LTC. And I think, the real, I mean, pricing, I think we're fairly aggressive on pricing. I'm sure you could find somebody cheaper if you look hard enough. There's always somebody a little bit cheaper. I think that what we bring is, we're not a huge team. You get to know us in person. You get to work with the same person, throughout the whole, hopefully multiple times that you work with us. We bring the technology. I believe we bring a great fast process. I mean, you probably behoove yourself, if you're researching New Silver, go on to Trustpilot and look at our reviews. I mean, you probably find things along the lines of what I'm talking about here from our actual customers. So I do think we bring value, we bring experience, we bring customer service, and we bring technology. And our pricing is along the lines of what many others offer, I believe.
Right. And this whole white label program, partnering with brokers and smaller lenders, is this something that you plan to grow and have become the majority of your origination volume in the future?
We haven't thought about it being the majority. It'd be great if it continued to grow and sort of percentage wise was growing and overtaking direct business. I still think we're a great direct lender because of, again, the technology is there, and it's there to service the needs of the borrower. So I do think direct lending is great. We are definitely planning to grow it. We haven't thought about it being the majority, but that's not a bad thought.
I guess that's a good way to scale as you rely on others to bring in the business versus you. I mean, obviously you still have your retail channel, and you could still try to reach borrowers directly, with wholesale, it just becomes a lot easier because you get one good partner who finds all the bars, and you get 100 of them or 200 of them, and that's an easier way to get more origination volume. Is
Yeah, absolutely. And I think that is probably the way a lot of companies scaled, right? No, it's definitely something we're pursuing. We're working actively on that. Yeah.
All right. And then tell us a little bit about your thoughts on private lending for the future. We're in late May right now. Do you see any major changes happening or um, anything that keeps you up at night as far as private lending in the future, the next 6 months or the next 12 months?
I think, as we kind of move into the age of AI, obviously what you touched on earlier, fraud is always top of mind, right? Like we're always cognizant of like the changing nature of technology and the various ways that malicious actors can are they're out there trying to figure out how to scam people basically. So that is something that we're thinking about, and it is going to be a challenge, I believe, for the industry to tackle right over the coming months, years, and what have you. As far as like the market in general, I'm hopeful that the macroeconomic factors will not weigh heavily on interest rates, and I'm hopeful that we can continue to see a downward trend in interest rates and cost of capital, and that we haven't seen this, you know, the promised real estate boom after sort of this, I guess, slow down, right? Whatever's been happening, however you want to call it, we've kind of, I haven't looked at like sort of the overall transactionary numbers, but I think they've been petering down, in the retail consumer world, transactions are kind of slowly coming down, though, you know, private lenders are continuing to grow. So I think private lenders are taking maybe a larger chunk of the overall transaction markets. And that is not necessarily a great thing in itself, in my opinion, but it is what it is. And I'm still hopeful that transactions overall, like I want to see all transactions go up, right? Just more real estate being sold and bought in this country. And that's going to benefit, I think, our industry and many other industries as well.
Definitely makes sense. And since you, as a technologist, AI is top of everyone's mind. Any trends you see happening with AI as it relates to private lending, with either acquiring new relationships or just making the process more efficient of closing a loan?
Oh yeah, too many to list there. But I think AI is definitely helpful for us, and I'm sure it'll be helpful for the industry. Like we kind of put AI as like top of mind for the entire team, right? We have AI office hours, we have training, we have things that we do just to get people, because we see the ROI. Like one person, even if we're just using like Claude or whatever, right? Just for I don't know, like we just built like a skill for appraisal review for certain things in the appraisal, right? Just it's not a game changer, but it saves you 15 minutes from having to read through and look for those things, and you get it done in 30 seconds, something like that. So we see the ROI clear, um, and I think it's just going to continue to grow.
Do you have any thoughts about AI being sort of the main communication for borrowers? If let's say someone's inquiring about a loan, and are they at New Silver? Do you still want them talking to a human, or do you have any sort of AI, like they use a chatbot or a voice AI to get their deal screened before they talk to a human?
We think we want to give people options, all those things. Or I mean, I don't think right now AI is not going to be able to close a deal today. We do have we have chatbots and other things and automated conversations and things like that are more for like follow-ups or reminders or quick Q&A type of thing. We still want them to talk to a loan advisor at this time. I do think there's going to be a time. I don't think it's going to be into this future, but it's not going to be the borrower, but it'll be their chat GPT agent, applying for a loan from 10 different places and then coming back to the human behind the screen and saying like, all right, I went to XYZ lenders and this is what I found. I recommend this one, right? Like that's probably, I don't know, maybe already happening, maybe not, but it will happen. And maybe when that happens, we won't need a human anymore to talk to them, right? Because then It's like AI just goes in, agent goes in. We have an agent on our end. They talk, and maybe make a deal.
Definitely. I mean, I've been thinking about this a lot as well because we're building a new platform that involves AI to collect the information from borrowers. So I think one potential issue I could see is that if they're using an agent and they say, hey, here's the loan request, I have, pitch it to 10 different lenders. How do you deal with the back and forth of hey, we need this information, we need that. A lot of times it seems like borrowers and even brokers sometimes are guilty of this as well, is not providing everything that a lender would need to know in order to even price a deal or determine if they're even interested. And there has to be all this Q&A back and forth that would, all that communication would have to happen. And if someone has, an agent dealing with 10 different lenders, that seems like that could be a nightmare. Any thoughts on that?
I think the nice thing is that agents won't fib, right? Like they're not gonna say my credit score is 750 when they know it's 700. So again, if the input is bad, then obviously the agent won't have real data, and then they'll say whatever they know. But I think it's going to be a net positive in that the agent will hopefully will collect enough info, and then be able to go out and have that info on hand. And kind of figure out, and it's not just going to be pricing, right? They're going to look at whatever their important factors, who can fund the fastest, or who's in the state, or what's the leverage, and all the things that borrowers look at. They're important to them, and maybe there's going to be some kind of standardization, right? Like there's some kind of private lending protocol that agents follow, right? And now, okay, you got to collect like these 10 docs from your human client. Once the agent has those docs, then it can go out and source information from the list. I mean, that's a bit of a scary thing, because then what happens to sales? Is sales even, a thing? Like, is sales really needed, or is it just purely based on agents' understanding of the factors that are most important to their boss, to their human?
Yeah, definitely. Well, I'm sure we'll find out how that all plays out just in the next few years, or even next 12 months as this agentic AI blows up and becomes more mainstream.
Absolutely.
Yeah.
It's a fun world.
Yeah, definitely. All right, Kirill, that's all I had on my list for today. Anything else you wanted to add before we sign off?
That's it. I enjoyed the conversation. Thanks for having me.
Yep, definitely. All right, thanks for your time, and we'll be in touch.
Thanks, Rocky.
And that's a wrap for this episode. New Silver has been listed on privatelenderlink.com since 2019. I'll put a link to their profile in the description. Check out their retail profile. I'll also put a link to their wholesale profile so you can learn more about that program if you're interested. And that's for brokers and lenders as well. I hope you found this episode to be insightful. Thanks for tuning in and listening all the way to the end.